Okay, let's break down some markets here. Starting off, Aussie CAD, bearish. There's a supply zone right here. This is definitely a pretty valid trade. Got a 4-hour supply area here. Condense this, put this here. About 6 hours left in the day. It's kind of printing a doji right now though, so this is the end of the month marker here. I would say we are definitely good to target lower. This is your full monthly range from here to here, which it has done close to already. Delete this here. If we check the monthly ATR, it's at 260 pips and it usually moves about probably about 320. So there is some room for it to move down if it continues to do so. Aussie Swiss currently in this trade, want it to break lower down to its monthly low target, 57 here. It is currently breaking this area, so hopefully the daily closes below that. You can see on the 4 hours going to retest this area. Hopefully it rejects and then heads further down. We can move this. This is a possible trade if you wanted to take it. Something like that. Get a 6R on it. Keep the stop above this zone and you're good to go for that. And target this full monthly range. It's about 300 pips, that's what I'm doing. Aussie yen, I think these yen pairs are just going to be kind of flat for the rest of the month before they start heading back up. They're all kind of retracing in their own way, but to me it's not worth getting in. I do think the Aussie itself is weakening, so I do think there's a chance that Aussie yen goes down to its monthly low here, 92 level. But as far as a trade setup, I don't see anything that is worth the risk. You could put something like this. You can kind of see it respecting this 4-hour zone, but don't love it. So if you wanted to counter trend trade, this is the position you would take, but it's pretty ugly to me, so I would not. Aussie yen, I did draw this up and I thought because it's below the moving average and it was rejecting this area, it might have been worth a short, but clearly not now. So I never took it or anything, but I thought it might be an idea. Now you have to just reevaluate this. I mean, price was below the 4-hour moving average, so it was considered bearish, but now it's blowing through this zone, obviously. And so I think the Kiwi is just really weak right now, so you might have to just wait for it to come up into this area and see if any trades form there. But for right now, I would wait on Aussie Kiwi. There's nothing there. Aussie dollar hit this area twice now, rejected it, so that might be the high. We could consider moving these down. These are your monthly ranges, so we can make these even numbers. 69 level, move this one up, 53. That's kind of your monthly range. It didn't make it as high as I thought it would, but that is okay. I'll probably consider shorting it now back down to its monthly low level. This is a 370 pip monthly range. Currently I don't see any trades for this pair that would make sense to take. You can see it hitting this 4-hour area here. It's retesting it now, retested the bottom. I would wait, if I was to take a trade, I would wait for it to break this zone and then head lower and target that monthly range. But as of right now, I would wait. This Aussie 200 is retesting this zone, so but it is above the moving average, so I don't think that it is worth shorting just yet. Might be worth waiting, especially in waiting to see how today closes. Yeah, I would wait till to see how today closes and then maybe enter a short possibly, but you could also just wait until there's more bearish momentum coming to the market, because right now there is not. So to be on the safe side, you could just wait and then ultimately target, this monthly low, which could be a huge stretch, but could still be a good potential trade. CAD Swiss seems to, it did its full monthly range, so there's a very good chance that it starts to retrace, which it appears to be doing now. This is a previous area of support. It has hit it twice now and is rejecting, so there is a chance that, very good chance that you could target the retracement move of this leg, so something like this. Target this zone up here, something like this. Target back into this zone for a retracement trade. Again, this is bearish, so you are counter trend trading. However, this pair is overextended. It usually moves 260 pips in a month, and it's already at almost 310. So it is overextended. It is hitting this zone. It is rejecting. So not a bad trade at all. You could put this here, something like this. Target maybe 150 pips if it comes back down to the zone, or you would get into it roughly now, and then your stop would just be a little bit bigger. But if you wanted to wait and see if you could find a better price and just wait for it to come down a bit, if it does, then you can get in, get a better price, get a better R ratio. If not, this is pretty much your trade now. Then we have CAD yen. So the CAD pairs, the CAD crosses do seem to be rejecting. So the CAD was very, very weak and tanked against the yen, against the Swiss, but now it seems to be finding its area of support and will most likely make its way back up. So this is again another retracement trade based on the monthly leg. So on average it moves 530 pips a month. It's at 514, so it's pretty close to its normal range that it has already moved. So there's a good chance that this heads up. You could take something like this, target this 618 level, or then target the previous highs, depending on how long you wanted to hold your trade. And if it makes sense to do so, that is your trade. It's not the best R ratio, but it's relatively safe, so it could be worth taking. Swiss yen struggling at this area, but I do believe that it will break high, or I don't think that the Swiss is weakening anytime soon. I think Swiss yen is a good buy for a long time. I think you can wait for the best entries, like for the best prices possible, but I mean it had a little bit of a pullback here, so you could have bought more here and you would have been just fine. You could buy it now. I think Swiss yen is just a great buy, and then the swap rate is excellent too, so you will make money simply holding this position. If you just buy Swiss yen, you'll make money. This is the dollar index. So this moved its full range, and now it seems to be rejecting this area, so could very well possibly be retracing back up. So you could take a retracement on this leg here and target, well, this is big zone obviously, but ideally a little bit higher than that, back in this zone here between the 50 and the 618. You could target something up here if you were to trade the dollar index, which I do not. I cannot through my brokers, but this is a fair trade setup. You can see multiple rejections, 1, 2, 3, and now 4. So pretty safe to enter that if you wanted to. And also you could use this dollar index to correlate with the other dollar pairs and see if they make sense to trade, because as your dollar gets stronger, your other commodities that go with it will get weaker. So obviously USD yen will go up, but gold would go down, type of thing. Euro 50, I am in this trade, not this one per se, this markup here. I don't know what price I'm in, and I don't have a stop, but I do think this is an excellent trade. I think if you could get it back up at this zone here, 1, 2, 3, 4, 5 rejections. So there is a good chance that as price continues to reject this zone, it is going to want to move lower, and eventually once it cracks this major zone here, then it should head lower and lower and lower, and then this is your moving average, so it is catching up to the current price, and then once price breaks below that, it should be good to head lower. Euro Aussie, so this is interesting because it is very bullish. However, it seems to be losing momentum. We got 1, 2, 3, 4, now 5 rejections, so this could be a good short position. Again, it is counter trend trading, but you could target this monthly low. This is its normal range. It's about 650 pips, so you could target this, but it is against the trend, so trade at your own risk, obviously, just like always. But I do think that because of these previous rejections, it is a very good trade. You could even, if you wanted to, target one of these mini areas first. If you wanted to just take the trade now kind of thing and target this area, you could, or you could hold it for the full month. It's totally up to you. But I do think Euro Aussie is a good short now. Euro CAD, I can also see it forming this area of resistance. It has moved its full monthly range pretty much. So it usually moves about 485 pips, and it's at 499, just under 500 pips. So it has moved its monthly range, so there is a very good chance that it wants to retrace, so you could target something like this. Again, that would be a counter trend trade because it is bullish. However, if you keep your stop above that zone, there's two trades here. So you could take this retracement trade and target this 50% or this 618 zone, or you could hold it all the way to 143.8, which would be the full monthly range, which it's already completed. But if price does become bearish because EuroCAD is running out of upward steam, then this trade would play out, obviously, but that is higher risk. You could take the simple retracement trade right now, and that'd be a pretty safe bet. Get a 3 or 4R, and you'd be good to go with that one. Euro Swiss is bearish and is breaking lower, but it's struggling with this zone here. But I do believe that once it breaks this zone, it'll hit its full monthly range at 95.5 level. And I think that pretty safe trade. I think all the Swiss pairs trade very well, very consistent. I do believe this is a good short, just depending on when you want to enter it and if the R ratio makes sense to you. I think it's a safe short now. Euro pound don't do much with. Seems to be rejecting this 86 level. It is bearish. If you wanted to, I mean, this is not a good trade by any means, but you can kind of see something forming here right at this 86 level. It's had all month to break above this 86 level, and it hasn't. Now it's retesting it again and it's rejecting. So if you wanted to target something like this, again, this is not an ideal trade. I do not like this trade, but it is a trade that you could take just based on the fact that it is rejecting this level here, nice big hammer candle type in here, rejected. It is a whole level, the 86 level. It's basically retesting the monthly high now and failing, so this probably is actually a pretty good short, to be honest. You could get a really nice R ratio right now if you took it. It is with the trend, it is bearish, so I don't think that's actually that bad of a trade now that I look at it, but it's not something I want to take, but it is up to you. Euro yen just kind of, it's retracing but almost just more consolidating. It's not really, I think it's probably just going to hang out before it starts its next upward leg movement. So Euro yen, I would probably just wait for a bit. Like, it is kind of rejecting at this area now, so it might keep on retracing down to one of these areas, the 50% or the 618 or the monthly low itself. But for me, I would just wait on this. I do still think it's bullish, obviously, but I think you just have to wait. I would rather ride the trend back upwards than counter trend this right now. Just don't think the risk to reward is there, so I would wait on Euro yen. Euro Kiwi, similar to Euro AUD, you can see it there, rejection, seems to be rejecting close to this zone as well. So don't really think there's a trade here yet, but maybe in a few days, and we'll see how like today closes, and then maybe by Thursday there might be more of a setup. It might be an actual good short, which would be counter trend trading, but rejection. If we can find some more rejection here and it creating another zone to short from, then it might be worth taking. Euro dollar is actually it's moved its full monthly range of about 400 pips. Let's see. Yeah, it's at 442 and it usually moves about 430, so it's over its monthly range. It is starting to show rejection in this area, which is a whole level. So, and with the dollar getting stronger and retracing, this should shoot down a bit. So if you wanted to take a retracement trade off this, certainly could be something like this. You're basically just targeting, because it is still bullish, but you could target this 50% area, which is actually aligns with these candles here. So this is actually a pretty decent retracement trade. You could get maybe a 3R on this if you got in on it now. If you wanted to shrink your stop a little bit, you might get a 4R, so that's not a bad trade at all. Could definitely take that off the euro. The euro dollar. Pound Aussie, I do think, is losing momentum. Just delete all this. I don't really know if there's a significant trade yet that I would take. You can see this bearish 4-hour candle coming in, but it's got a couple hours before it closes. So I mean, this might be the start of the bear movement down. Pretty big wicks here rejecting it. So it could be a possible short right now, but I would not take it. I don't see a significant zone, and I would rather just wait a couple days for more confirmation. Pound CAD is hitting this major zone here and rejecting. I do believe it's close to hitting its monthly range. Its monthly range is 577 pips. It's already at 557, so it's only 20 pips away from its normal monthly range. So there's a good chance it's already moved its monthly range and now is retracing back. However, that is counter trend trading. There's rejection here, but it's not. There's not enough. These candles aren't big enough. These wicks aren't big enough for me to really. Today's wick is pretty nice, but I would still wait on this. I wouldn't take pound CAD trade yet for a short at least anyways. I would just wait a bit and let a better setup take place. Pound Swiss, I am in this trade. It is currently breaking this zone. I want it to go lower to its full monthly range here, and it seems to be doing just that. It is now broken below this 200-day moving average, which is a good sign. Good bearish momentum too into it. So this is really good. I would say this is one of the best trades there is right now. Depending on where you could get in it, you could set your stop just above the zone kind of thing, and you'd be good to go, especially if you wait for today to close and then enter it tomorrow technically. Then you're not paying swap, which is good, and then you've solidified the breakage of this area, which makes your stop more prevalent and safe to keep above that zone. So that's pound Swiss. That's a good trade. You could take it now. Pound yen. Again, these yen pairs are just kind of retracing slash staying stagnant. I don't have much on this right now. I would say as the pound gets weaker, this will also come down. But as far as a trade, I would just wait. I don't want to counter trend trade this. I would wait for it to probably just make its way slowly down, retracing, and then as soon as I see the bullish momentum come back in for the yen pairs, then I would start buying pound yen again. But for right now, I would just wait. Pound Kiwi. Okay, so this is good. I'm actually going to mark this because this is a trade I might take. So rejection, rejection, rejection. There's big bearish momentum out of this zone. Now it's retesting, rejecting heavily. This is a major zone here where there's a ton of rejection already. Weekly wise, also rejecting. So this would be a counter trend trade, but you could definitely, I would say, still take it and target this full monthly range here. Something like this. Okay, maybe keep your stop a little bit above here. Get a 5R. I think this is an excellent trade. I think as soon as price breaks this area, I mean, if you wanted to be even safer, you could just target this area. It's not the best R ratio, but that's still a decent trade. But if you wanted to target the full monthly range, which is what I would do, then this is your trade here. And you can see, like, this was the start of the end of June, so this is the start of July. You can see we're over halfway through July and it's barely made any higher. So now it is rejecting heavily here, right around this 209 level, right around the 208 level. Now it's rejecting. So I do think this is a good trade. I would probably take this. I think this is the end of the pound Kiwi momentum upwards. So yeah, if this closes, there's about 6 hours left on this daily candle. If this closes like this, I would say this is a good entry. Short. Pound dollar is also seems to be losing momentum upwards, but the dollar retracing and gaining strength back, it will bring this down. So I had marked this full monthly movement up. It didn't quite make it, but it was pretty close. So now I think we're looking at something like this. Could retarget this zone here. I don't know, there's not really a good daily level of supply, but there is a good monthly, or there is a good 4 hourly. So something like this. There is that. So something like this you could definitely take. You can see the 4 hour candles heavily rejecting this level. There's a whole level here. I love whole levels. Price always gravitates and tends to respect whole levels. So here's your 131 that price is rejecting. So it doesn't like 131, which means it wants to most likely head lower. If this daily candle closed right now, I mean, that is a lot of suggesting that it is going to head lower. So I think this is a great trade. You get a 5R here and target this previous area of support, which it is most likely to head to before it then heads higher. If it decides it wants to head higher, you could even throw a fib on here and see what kind of areas. Yeah, so this lines up perfectly between your 50%, your 618. This is an excellent trade. You could take this all day, the 5R. I think it's awesome. Moving on, the Germany 40 index. I'll just skip past that. Alright, so your NAS 100. This one eventually is going to come to an end. I don't know when. I don't feel comfortable buying this. It's so overpriced, and there's just no real good trade setups per se. I mean, if you want to just buy it and hold it and pray, I mean, you could do that, but that's not what I like to do. So I would just wait till this momentum dies down or comes down, and then we find an area where it makes sense to enter a trade, because right now there's just nothing for me personally. I don't want to touch this index. NZD CAD seems to be making its way back down. Lots of bearish engulfing candle here, and then today's printing a nice bearish candle as well. This is the monthly target, so we'll most likely just keep heading down to that. Price is now bearish, it's below this moving average, so I would say if you're going to take an NZD CAD trade, it should be bearish, should be a short trade, but I don't really see a very good setup on it yet. It seems to have found resistance up here and now is heading lower, but I don't see a trade setup with that I would like to take. NZD Swiss is cracking this zone. I'm currently in this trade. This is not my actual trade here. I don't know, I don't have a stop, and I don't remember the exact price I entered at, but price is breaking this zone, so most likely head lower. This is the full monthly range, and I'm targeting the 53 level, so I want that full monthly range out of that trade to maximize my return. So I think this is a safe trade. You could enter now. You could wait for price to come back up and retest this area possibly tomorrow, and then enter a trade, something like this. Get a 3R, get a 4R, and then you're looking pretty good. I think all the Swiss trades, shorting them is a fair analysis. Again, Kiwi Yen, same thing as the other yen pairs. Don't really think it's worth taking anything. I would just wait till the bullish momentum really comes back in and then consider buying them, but for now just wait. Kiwi dollar seems to be hitting this area again. 1, 2, 3, 4 rejections, and now it's selling back down. So if we look at the monthly range, usually moves 336, it's at 285, so there is still some room. So there is a chance that price comes down something like this. Just move these up. Oh, it didn't work. Select both of these, move them. So that is your monthly range-ish. Clearly did break this zone, and it is technically bullish because it is above this moving average, but I do believe it's just mostly ranging, so you could target this level again at the bottom of the monthly range. I don't think this is the best trade, don't think it's really worth taking, but could. I mean, it did respect this 64 whole level. Yeah, pretty good. So I mean, you could take this trade. I just feel like there's other trades, but if you have extra capital that you want to trade with, then you could do that, but I would not. Oil's interesting. It is still bearish. It is retesting this the whole $77 level. It is retesting this moving average and had bearish momentum out of this zone and at this moving average. Now it seems to be coming back up and retesting this. As the dollar gains its strength back and retraces, oil should go down, so I would be short oil. And then obviously if it cracks this area, which has really saved it multiple times, this about $67 area, it should head lower to 64. So I would be looking to short this again, something like this. Keep your stop above that level, target the monthly low, and then just wait for some more rejection in this zone, and then you're probably safe to enter. I do think that's a decent trade. I do think with economic slowdown, high interest rates, all that, I do think oil is bearish and will continue being bearish, but you just want to wait for a good entry, and a good entry would be once it rejects this area, then you set your stop above this area and you are good to go, most likely down to at least this level. Shoot for the $67 level or the full monthly range, which would be the $67 level. UK 100. Currently I am in this trade and it is not favoring me, but this is not my actual trade, but it is bearish. It is below this daily moving average. It rejected it right at this 618 level, so I thought the entry was good. Turns out it's got a lot of bullish momentum and it's pushing upwards, which doesn't necessarily mean that it'll continue upwards, but it could just be sucking in a lot of buyers. I don't know. I'll just have to wait it out. I'm not too concerned. I still would have entered it again based on what I've seen. So I think anytime you can, even when a trade goes against you, I think if you're just confident on your entry and you look at the technicals and the fundamentals and everything, and you would say, yeah, I'd still take the trade again. Obviously, I wouldn't take the trade right now looking at this daily bullish candle from hell here. But I mean, like, I think I entered the trade yesterday, and this bullish candle was not like this. It looked just like this one the previous day. So but it does happen, so we just have to go with the flow. And if I might have to do some managing of this trade soon. I might have to either hedge it or take another short position and try to average out of it or average into it basically, and then make even more money. So I'll reassess this in a little bit. We'll just see how this closes. I do believe all the indexes except the NAS and the S&P obviously are bearish, but I mean this is textbook basic trading here. So like lower lows, lower highs, lower lows, lower highs. So it's testing this area again. It's got a lot of bullish momentum going into it, but this does have roughly 6 hours before it closes. So like hopefully the bullish momentum dies down at the end of the day. Hopefully it sells off at the end of the day, and then that will better me a lot. I'd be very happy if that did that. So we'll just have to wait and see for that. So I'm in this trade, but I would not currently recommend a trade on this. I would just wait and see, possibly tomorrow or the next day, if there's a better setup, because currently this one is invalid. S&P 500, yeah, seems to just be trickling higher and higher and higher. You're welcome to buy it, but I am not. I will just wait until I see some actual resistance and some bearish momentum coming into the market, because I just believe it's very overpriced. I don't see any good entry areas that would make sense from a trading perspective, so I'm going to wait on the S&P 500. USD CAD is bearish. This is an interesting pair because it does correlate with oil a bit, and the USD is gaining its strength back, but so is the CAD. So I don't really see a trade with this pair. It's kind of ugly. I mean, it is bearish, so like shorting it probably would be better, but however, there was huge momentum out of this zone, so I would just wait for this pair. I don't see anything significant with it. USD Swiss obviously taking a massive hit, completed its full monthly range. I don't believe I traded this at all, which kind of sucks. I missed out on it. I don't know why, I just didn't take it, but eventually this should retrace a bit. It has hit its full monthly range, so it doesn't mean it's going to stop moving, but statistically it doesn't move much more than it already has on a month. So once we see, and again, the US dollar should be retracing and should be gaining its strength back, so we should see some sort of tracement like this, but we would just have to wait for actual support. So I mean, this, we'll see how today closes, but it was kind of making an area of support here, but now it looks to be breaking it. So I mean, depending on how today closes, you might be able to take something like this, but I would wait for more confirmation before entering something like this. But ideally this is your retracement trade once it sets up. USD yen, I do think it's found its bottom and it will trickle back up a bit to this area. I don't think it's full on back to its bullish. I think it'll take the next couple weeks, the rest of the month, for it to set up its full monthly bullish movement, which will be next month. So I mean, you're welcome to enter a trade here. I took one, but I got out of it. I just break even. I just changed my mind once I was in it for a bit. But yeah, you could dig a buy up to this area. I don't think it'll move there very quickly. It'll probably take the rest of the month to move a couple hundred pips, but it did move its full monthly range of 700 pips. It did print this nice bullish engulfing candle, this huge wick right at this whole level here at 138, and then two more wicks right through that level. So it does seem to be holding at 138, and like I said, with the dollar index increasing in strength, USD yen is also likely to move up. With the swap rate, the interest rates, the buying USD yen will have positive swap rates, so you could literally just buy this pair and hold it right now and make money, as long as it doesn't go super against you, which I don't think it would. So if you wanted to do that, you definitely could. Silver I don't really trade, don't really see a trade right now. It is bullish, but it's heading into this major zone, so I would just wait on silver. I don't really see much that would be worth taking. Gold is going through the roof right now. Wow, it's moved almost 30 bucks today. It's probably headed to its monthly high here, monthly high range at 2020. So I mean, I don't know where you would get in on it. I mean, you're welcome to buy it now, but I usually like to wait for areas of supply, which it is not anywhere near. It is actually at a area of resistance, so I would probably just wait. However, it seems to be blowing through this area, so it probably is a safe buy, but I just wouldn't take it. I don't think it would make the most sense to take this buy right now. You're kind of just, I mean, unless you're a momentum trader and that's your thing and you're good at it, then by all means do it. But me personally, I like to wait for areas of supply before I buy or sell something, and right now we're just not near it. So that is it for the Forex pairs. Hope you guys got some value from that. I will put out some trade signals. I'll go back through everything, put out some trade signals from what I see is really worth taking, and then I will do a highlight reel of this stream. So thanks for watching.